But it's amazing how people are paying up for services, and paying up for vacations, experiences, as opposed to, you're seeing people not buy as much clothes. You're seeing Walmart, Target, Kohl's. You're seeing that big shift in spending where you're still seeing it pretty strong overall when you look at the numbers and even, from the economy, but it is going to different things. And we're even seeing that in earnings, right? I mean, some of the earnings that you cover with Camping World and stuff like that, and we can get into that, but it's interesting to see that hey, we're going to pay up for these experiences because we didn't go away. And that's why we upgraded our membership. We didn't go away really with the family for 3 years. It was fantastic. I spent time with my daughters. Quality time was great. I was totally, unplugged.
Unplugged for the most part, yeah.
Unplugged for the most part. And, you come back and you're really busy, of course, but it's nice to be unplugged. But people are paying up for those services and experience because they haven't gone away for a while. And that's a great thing. But you're seeing clothes, spending on clothes, on toys, on even electronics with Best Buy and TVs and stuff. So it's just seeing that shift is really going to impact certain stocks. And we're even seeing that through earnings season so far. But, talking about the experience, right? I mean, Camping World reported, I know it's a company that you covered, which is really, really, reported really good numbers. Yeah,
I've said on the sidelines, I like this because Camping World is run by Marcus Lemonis, who is a very successful, very driven guy. He's been on CNBC with a couple of different shows, as well as guests and other things. And I've talked about this in past podcasts, and I've talked a lot about this with you, Frank, because from the surface, you can have a simple T-chart, and you obviously want a great CEO, an honest CEO, and you want a solid business, and you want a business model that can compound your money, and you know what you're getting. However, this business, Frank, happens to be in RVs. And what's going on right now? Inflation is at 40-year highs. You got gas prices, even though they've come down, they're still elevated from pre-levels and quote unquote what normal levels are. And yet this company continues to just knock it out of the park. And I've been sitting on the sidelines. It's got a huge short interest. FinViz, which is a great free site, they put it at around 25%. I've seen other websites suggest maybe even 30% of shares outstanding being sold short. So when you got good numbers like this, the stock pops, people have to cover. I think it's up 15 to 18% as we speak. Mm-hmm. But they recorded great revenue. And remember, these guys are lapping tough comparisons, meaning last year was a great year for them because what did COVID do? COVID pulled forward a lot of people to get into this lifestyle. And Marcus Lemonis on the conference call talked about, and analysts did a good job, about, hey, what are you seeing as far as demand? He said Marcus Lemonis said demand is still at levels where they've seen compared to the best times in the history of the RV business. And he doesn't anticipate, what he's worried about is manufacturers getting over their heels and manufacturing too quickly to, kind of throw off the balance and supply and demand for that. But what I want to tell people is this, Frank, do you have it up on your screen? I think
I do have the stock up on the screen, yeah.
Okay, so it's roughly we'll round down and say it's around 8% dividend rate at current prices. Maybe a little lower than that because I don't know if that's taking in today's pop.
It's about 7%
in the
now,
stock.
Yeah.
Okay. On the conference call, this is one of the last paragraphs from Marcus Lemonis. He says, I want to clarify because nobody has asked it today. Now, this is just from the conference call. We are very confident in every single model that we have run, including the worst downside case that our dividend that we pay today will continue unless there's something that we don't know about that happens tomorrow. Meaning, he's aware that gas is going hot. He's aware that interest rates are moving up. They've gotten into the rental market and they've gotten in. Have you seen those commercials where they have camping has never been more affordable? Mm-hmm. Have you seen those?
No, I haven't seen them.
It's basically like a $5 a day deal is what it averages out.
Yep.
It's a smart marketing thing. But here you have a driven CEO that owns a huge portion of the stock that's telling you a huge high dividend.
You're generating a shitload of money, too.
Their cash flows are
margins 35%. Wow. I mean, This is just a quick take on CNBC. And guys, you could see this on our YouTube page. I just bring it up so everyone can follow along on free sites and stuff. Otherwise, I bring up Capital IQ and really break down the numbers. But yeah, the numbers are there. It's pretty incredible. So,
but there's in a bigger picture, we'll get into this in later podcasts, but in the big picture of thinking about, hey, where's the world going? That's what you want to think about as an investor. Are we going into a recession? If we do, what does that mean? If not, it doesn't matter. When you have great operating businesses with great CEOs like this with skin in the game, you definitely want to pay attention to that. Another, you want to switch to you, Frank, on your earnings? Because I want to go to Eaton because that was amazing.
Eaton was great. We definitely want to cover earnings. Before you go forward, though, because when I upgraded to this Hall of Fame membership, which goes like 10 years and they give you certain weeks, and you have, just benefits over long term and really, really good upgrade. And it worked so well for me last time. It doesn't work well for everyone. They do timeshares, and timeshares you can get screwed on a lot of times. This isn't a timeshare. You get like like an equity ownership. I could sell this membership. I could gift it to people, and sell weeks and stuff like that. But, one of the things they said was interesting for the amount that I paid. They're like, I was going to pay up front. And they said, and before that, they're like, with financing, we'll give you 0% over, 3 years. I'm like, 0%. I said, how is that? He's
3 years. Sorry.
Said, yeah. 3 years for this membership. So I'm like, how are you able to do that? Because right away I'm thinking like, the people there, they always upsell you at these places. Every time you go there, they make sure you go, and they're like, we'll give you $500 off of this, this, and this. If you just sit down, they got this great salesman that comes and tries to sell you, right? And they're really good. But I said, how are you able to do that? And he said, well, the upfront payment is probably about 15%, at least 20%. And once you pay that, then you could finance the rest of it, but you're financing at zero. And like, if you don't pay, then we just take the weeks back and we'll sell them to somebody else. And I was like, that's kind of interesting, because you're looking at, whether it's RVs, whether it's cars, right? Everyone always says with the car market, and it's subprime and people are going to get killed, and no one's making that payment. It's not housing. In housing, you can't kick someone out of their house. It's almost impossible to get people out of the house when they stop paying. And every homeowner knows that. With cars, they just come, they repossess it, they take it, they take the car, they got the asset back, right? So now they could resell it, they could do whatever they want with it. It's a big difference. Even if these people don't pay, they could go there and take their asset back. So I want to see how that plays out. Maybe that's happened a lot, but I haven't heard it. I mean, I've been there and they give me the pitch all the time. Usually I never upgrade. This time we upgraded because we haven't been on vacation for a long time. And I just, the kids are at the age where, we have access to tons of Hard Rocks internationally, and I want them to experience internationally. I didn't have that when I was a kid, and man, I wish I did. So this way we could travel a little bit more, but, outside the U.S., but just different financing vehicles. That was surprising. But, I just wanted to mention that because, they're always like 15%, 12% or whatever. And that's where they get you, right? They crush these poor families and pay $400 a month and you're good. Yeah. You got to pay for like 80 years. It's like, and they destroy these people. But, I was just surprised at that. Like just that financing. I'm like, how do you get away with that? They're like, well, you're paying for those weeks up front. So you're paying. So we got our money. And if you don't pay after that, like over the 3-year period, they still cover it with that payment easily.
That's a hell of a
And then
model.
they're like, okay, we're going to take everything away and you don't have anything anymore. We could, resell it to whoever. So it's just interesting. And seeing Camping World is just another thing where the experiences, it's not surprising. Man, the hotels were packed, charging, and I didn't cover this before real quick. I mean, charging outrageous. I paid $50 for suntan lotion. I'm not kidding you. And you can't get it outside the hotel. I was like, guys, I understand, like, you mark up shit, but this is stupid. This is ridiculous, right? And Pringles were like $12. I was like, are you kidding me? Like, some of the things there, like, we have access to all-inclusive. Everybody has all-inclusive there, but you have a lot of food for free, but everything you want to do outside of that, or little things inside the hotel that they'll charge you for, Escapology or whatever, bowling and stuff like that, they were banging you out, man. They were just like, I don't give a shit what you think. This is what you're paying. If it's not whatever they pay for bowling these days, $3, $4 a game, whatever. It was like $12. I mean, they just wrecked you. They were just like, I don't care. They're wrecking you. So you see that they're trying to get back profits, but hotels, I didn't want to go this direction. I'm just, remember everything because I woke up at a few hours ago, to be honest with you. But the hotels, they're going to run into a major problem. I know people want to travel, but the hotels are really fucking people bad. Just with fees, they're crushing you. The amount of money that you have to spend, even, airlines, you don't have a choice. Hotels, you may be able to go to different hotels, but now you're paying up and your experience sucks. And that's a major problem. That's a major long-term problem. When long-term, I'm talking about 2, 3, 4, 5 years, you're going to remember that stuff. And everybody right now, inflation through the roof, they're charging more, but they're giving you less, and your experience is worse, which is resulting in you destroying your brand, slowly destroying your brand. I've seen this happen over time. And I think hotels, I think airlines, you have to be careful with things like this right now. Yes, you're making your money and you're doing good. You're seeing record sales. And yes, it was tough during COVID with some of those other companies. But man, that's one of the things that I'm seeing where not only are we paying much, much, much more, the service is worse. And you're seeing that across restaurants. You're seeing, and you're going to lose those long-term customers. That long-term value is what creates your business. What's allowed me to work where I've been doing this for 30 years, where when we do a financing or we're doing an offering to buy virtual real estate, whatever, a lot of people just invest because they've been with me such a long time, right? So, and I've invested with other people that, have made me money over time. Now you're seeing so many companies where I usually stay at this hotel, I stay at that hotel chain, I fly that airline. the service, even the restaurant that you eat, the service is getting worse and worse and worse. And it's crazy. And yet they're charging more and more. You're going to see how this plays out. I mean, you've seen a lot of people get laid off and stuff like that. So maybe the employee situation gets better for restaurants at a lot of these places. But man, that's one of the things I just remembered. Sorry to go off on that tangent a little bit. Again, like I said, I haven't slept much, but I'm here for you guys. Getting home like 3 a.m.